Folks, welcome to Best Stock Charts for the coming week. We're going to talk about our week. How was it last week? We'll talk about the symbols that we're watching for this coming week. I'm going to set up my alerts on TrendSpider, and we'll talk about the whys behind we like these individual stocks. Those stocks will be TPX, that's Tempur-Pedic, Joe, which is an ETN, that's for commodities, coffee, BRY, DAR, DBD, a lot of Ds, DBI, DD, Goldman Sachs, and HASI. So a number of stocks to get to today. We're going to go over the technicals. I'm not going to spend too much time on the fundamentals. Why? Because it doesn't matter to me. So we want to trade small and trade often, not too often. We're not day traders. But before we begin, let's talk about our sponsor, which is TrendSpider. I don't do many promotions for many companies, very few. But TrendSpider is a partner of ours. We've been friends and partners for a number of years now. Just when they first started out, I saw the value of the product. We met, we talked. They gave me behind-the-scenes access to their beta versions. I said, I'm in. And here we are today, around 3 years later. So TrendSpider, don't settle for ordinary trading software. Automate your grunt work, folks. This is the one of the true values of TrendSpider is that you're automating your grunt work. You don't have to sit there. You can if you want. I do. Draw your manual trend lines. And if you're new or if you're experienced and you want to hone your skills at identifying patterns, support, and resistance levels, then manually draw your trend lines, then click the automated trend line functionality. See if you're on point. Many times, with all my experience still, I will draw my manual trend lines and all of a sudden I'll click overlay, whether it be on a daily or weekly time frame, monthly time, whatever, and it'll point out opportunities that I overlooked, whether it be support below, resistance above. It helps improve my risk reward. Also, you speed up your analysis with the automated trend lines. Again, a click of a button. You're going to see me use them today. Improve your accuracy. How do you do that? Well, you buy at support, you sell at resistance. Reduce costly analytical mistakes by also buying at support, selling at resistance, and using their scanners to find winning chart setups. Time your trades with precision by using their alerts. You're definitely going to see me use that today because I live by it. Because we use a rules-based approach. If this, then that. Meaning, if a stock pulls back to support, our alert fires off, well, then we'll entertain opening a position. If that position breaks out above resistance and our alert fires off, well, we'll take a look at the volume bars. We'll take a look at the higher level view of how the stock is trading relative to its indicators. And we'll look at volume as well. And we may look to add to that position, or if it had never pulled back to our support level, to fire off that retest of support, well, then we'd be opening our position. It's a rules-based approach. Before those alerts fire off, I don't think about them. I set my alerts and I forget them because I don't want any impulse buys or sells. I want to go about my life. And many of you out there have day jobs. Go about your day job because what it'll do, it'll fire off on your cell phone. It'll let you know when you have a breakout or a breakdown. So take advantage of our 35% discount code below. They have a 7-day free trial offer right here. You can take a tour. They have TrendSpider University. You can check out the functionality here. This is available to you even if you're not a customer. And I believe in it so much that I give it away free to our silver and gold level members, to the Contrarian Trader. For those of you not familiar with my service, that's when I send out my trade alerts. I open up what I'm doing in the market, whether it be buying stocks, shorting stocks, selling options. We don't do much option buying, but we sell premium to generate cash flow. You get my daily commentary on the closing price action of the market. You also get the week ahead commentary, where I go over the closing price action of the overall market and what our strategy is going to be for the coming week. That's already been posted in the members area for members. So members, the symbols I'm going to go over right now on Best Stock Charts, I've already gone over to a certain extent on the week ahead commentary as well, besides a review of our positions and our views on the overall stock market. So TrendSpider, 35% discount code below. You want to join the Contrarian Trader? There's a link down there below. Get access to TrendSpider immediately. And on a side note, tonight, folks, 6 p.m. Eastern Standard Time, we're going live on YouTube. It's going to be a big week this week, big earnings week. $9.5 trillion in market cap. We'll be reporting earnings. Amazon, Google, Microsoft. So check it out tonight, 6 p.m. Eastern Standard Time on YouTube. I already have the link established. So click the bell button, or if you want to get alerted before we go live, there's a link below. Opt in. You'll get an alert 15 minutes to a half hour prior to us going live. If you're already on our email list, don't re-enter it. You're going to get alerted. We hate spam too. Let's get to it. Now, this is a daily chart of Tempur-Pedic's symbol TPX. Why do we like it? Well, it has broken out above resistance. We have very, very tight Bollinger Bands. This is setting up for a nice Bollinger Band squeeze. Now, what I want to do here is I want to identify where I have support below, where the stock has been to identify where it might be going, but I'm also going to want to identify where I have resistance above, right? Because this all feeds into my risk reward prior to getting into the trade. It's very easy to get into a trade. Sometimes it's a bit difficult getting out. So you want to do your analysis right here, right now, especially on the weekends. Jot your plan down, execute during the week, but plan on the weekend or at nights when the markets close. That way you avoid impulse buying. So daily chart using the automated trend line functionality, click of a button, there you go. And you can see that right below we have support. We had broken out above it on the 21st. We broke back down below it on the 22nd, but wow, what a rebound on the 23rd. Very, very nice rebound. It's a breakout. We will have a little bit of resistance here, right where we found resistance on Friday. Now, if we break out above 40.06, where do I think we're headed? Simple. I have a monthly overlay here on a daily chart. I'm going to click the button, monthly chart. In dashed line shows resistance on a monthly time frame. I think that we're heading up here to around $42.60 before we see any type of serious resistance. So what I want to do here, I want to create two alerts. One, if we pull back and we do a retest of the breakout point, touch, bounce, a little bit of sensitivity, and we'll keep it active for 5 days. I also want to add an alert. If we happen to break out above resistance at $40.06, so I don't want any sensitivity. All I care about on that breakout is if we close above that $40.06 mark. If it trades there intraday, I don't care. At 3:59 Eastern Standard Time, I want to make sure that this stock, TPX, is trading above and poised to close above $40.06. And we'll keep that alert set for 5 days. You can see them on my right sidebar here. I can edit them if I want, but they're there. So between now and the time that these alerts fire off, I'm not going to think about Tempur-Pedic. So that's a rules-based approach. It's a very disciplined approach. It keeps you out of trouble. Remember, the money is made on the buy. So we don't go chasing stocks. And if they break support, we're not going to hope when we should fear. We're not going to go buying the stock. So TPX looking good as we proceed into the new trading week. Next chart up, Joe. Now, I went into this stock, or this ETN for commodities, not an ETF, ETN, because I was reviewing the futures market, and I saw on a monthly time frame that coffee was setting up for a beautiful, beautiful breakout. Remember, agriculture, whether it be wheat, it's breaking out. The breakout has already occurred, right? Whether it be corn, huge, huge breakout. All right, so we have inflation in agriculture. So what Joe has not done yet, it is not broken out with the rest of the pack. But the setup here is absolutely phenomenal. The question is, how do we leg in? How do we get involved here? Because it is a commodity, it's very volatile, so we can't just look at a chart and say, man, this is looking rock solid. Well, you could have said that back here, then we drop back. You could have said that back here, then we had a bearish outside reversal bar the following month. So we want to be very disciplined in our approach to entering this trade. There is a phrase that I like to use. It's called scratch the itch. What does that mean? Well, if you want to get involved with the stock and you're dying to pull the trigger, this chart looks so good, scratch the itch. Put on a fraction of your intended position. Then you have skin in the game. You take away that hunger pang, right? And you wait for your next breakout. So I really love this $40.78 mark because what that represents is a macro breakout on a monthly time frame. I'm not going to set my alert on a monthly chart. I'm going to drill down further on a weekly chart. And I want to overlay my drawings. And we had identified back here, my alert expired. Oh, actually triggered. And I avoided it because I saw this wick. I remember this. I didn't like the wick. It showed that there was profit taking on that breakout. So we did a pullback, almost retested support. Let's create a new alert. I don't think this is going to fire off. In fact, let's get rid of it. So where might we see a pullback to? Well, take out your crayon. And there you go. If we get a retracement, I'd be interested on a retest of this support level here. I'm going to keep some sensitivity on as reflected in blue. And we're going to keep this active for a couple of weeks. We want to give it some room. We did close out the week above the 2 standard deviation. If you're wondering what this line up here is, that's the 3 standard deviation Bollinger Band. The one below is a 2 standard deviation Bollinger Band. We could also set an alert here for a pullback to $38.73. Touch bounce, a little bit of sensitivity. And again, we'll keep this active for a couple of weeks. And now we set it and forget it. Let's go to a daily chart. Now you can see that we had a nice breakout on Friday. There was some profit taking. I like the support level. I'm not going to change this. If this fires off, we'll look to get long of Joe. Again, this is a coffee ETN. Put you long of coffee. Remember, we are in a new commodities bull run here, especially with agriculture, certain metals like platinum, palladium, copper, lumber, which is certainly not a metal. Back to the metals. Gold hit an all-time high last summer. It's been consolidating. It's setting up very nicely for a continuation move higher as well. Silver, same deal. So we're going to enter an era of where you need to have a leg on the side of commodities. It's not just about equities anymore. Inflation is here. Next chart up, BRY. Berry Petroleum. This is a Bollinger Band squeeze. Daily chart. I've already identified resistance above. And you can see that TrendSpider picked up a support level below where we bounced off of last week. It would have been great if I had an alert set down there. So let's set an alert for a breakout above this resistance level. No sensitivity. I'll keep this active for 5 days. That should do it. Our alert is set. Now, if by chance we get another retest, we're not going to repeat the same mistake twice. Wrong trend line. You could set alerts at these trend lines. We'll keep a little bit of sensitivity on here. BRY. And we'll keep this active for 14 days. And our alerts are set. Between now and those alerts firing off, we're not going to think about Berry because it's got to prove itself worthy of our investment dollar. So we set it and we forget it. Simple as that. The next chart up is DAR. This is another Bollinger Band play, earnings on the 11th of May. Darling Ingredients. I've never heard of this company until I ran my scan yesterday. You can see how tight these Bollinger Bands are on a daily time frame. They attempted to break it out, but they were rejected. We have a bit of resistance up here at this volume shelf. So our strategy here is pretty simple. What we want to do is we want to see a breakout. And we're going to keep this active for, let's go with 8 days. DIR, long entry Bollinger Band squeeze. And our alert is set. I like volume. Volume dropped off on Friday versus Thursday's down volume. Good stuff. Let's wait for that breakout. Diebold. Another Bollinger Band squeeze. Take note of this tight Bollinger Band, the 2 standard and even the 3 standard deviation Bollinger Bands. Very, very tight. This is probably going to break out really, really soon. Most of these stocks are going to break out really, really soon, unless the market goes against us. We have resistance at 1417, then another resistance level up here, right at this volume shelf at 1488. So what do we do here? We set our alerts. We don't care about sensitivity. All we care about is a close above it. And there we have it. DBD breakout above S number 1 of 2, the number 2 being above. Bollinger Band squeeze, same deal, 8 days, good to go. Set it and forget it. Now we'll set up our second one. Oops, I accidentally sent it at the Bollinger Band. Didn't want to do that. I want to do it here. What's great is that you can set alerts at Bollinger Bands, trend lines, support levels, resistance levels. Very, very vibrant software. So our alerts are set. We're good to go. Nothing else to do here until they fire off. Volume was good on Friday. You can also see using the heat map functionality that there's a lot of support in here. So in essence, what we did on Friday is that we did break out above resistance yet again, but this has been very porous of late. We've broken out, retraced, broken out, retraced. We really need to see a breakout above these resistance levels, and then DBD is off to the races for a Bollinger Band squeeze. How long does that trade normally last? Probably no more than 2 weeks. We're not day traders, right? We're setting up for, we'll put our order in. We would expect to be in the trade for about around 2 weeks. That's DBD, DBI, Designer Brands. Now, the value of this software is that it just doesn't tell you when to buy a stock. It also tells you when not to buy a stock. Case in point, if you throw up the automated trend lines, daily chart, click, you'll see that we broke down below support back here on the 16th. We've rallied back. We're seeing ever tightening Bollinger Bands, but we can't ignore this resistance above here. We now have 2 resistance levels. Primary number 1 is the one in red, and the line in blue, which was support back here, was resistance back here, is about to become resistance yet again. So let's keep that in mind. So if we do buy the shares, we'll set our alert here. All we care about is the close above, no sensitivity. And there we go. We'll keep it active for, we'll give it 7 days. All right, and once we break out and we enter the trade, we're going to want to set up a new alert to identify where we have resistance, because if we consolidate for a while, this is a rising resistance level. So we can set an alert for however long we plan to be in the trade. Go a week longer just in case. So if you plan on being in the trade for 2 weeks, set it for 3 weeks, just in case you stay a little bit longer. Because when you hit that upper band, if you're swing trading this, that's when you get out or book some of your profits, right? You want to know when you hit resistance. So that's the game plan here. DBI, waiting for a breakout, Bollinger Band squeeze. Let's move on. Oh, and by the way, I don't have an earnings date for DBI. They may have already reported, or it simply just hasn't been published yet. So check it out. Do your analysis. I would not trade any of these names into earnings. I'll share with you how we traded an earnings trade last week at the end of this video, but I would not trade to the long side these shares into earnings. So beware. DuPont is our next symbol. You can see this is another Bollinger Band squeeze. Our heat maps fired off. A lot of resistance below. We don't really need this right now. Let's take that off. So very tight Bollingers. A rock solid consolidation. We've been consolidating here throughout April. We have a breakout above resistance, but the however is that what was support back here is now going to act as resistance, as noted by the automated trend line. We're going to take it off. This is the value. This is how you stay out of trouble. Throw it back on. So right now, if I was going to open up a position on DD, I would stay very small because I'm aware now that I have resistance above. So where would we? Set that alert around 77.10. And I do send out alerts to all of our members. Okay, so we're going to want to get long, but stay small because there's resistance above. We'll keep this active 7 days. Make this an hourly breakout. And there we go. So DD, nice Bollinger Band squeeze. The last symbol we have up, it's HASI. I spent a lot of time on this one with members going over the multi-time frame chart. So again, members, more detailed analysis can be found in the members area. The week ahead commentary, go check it out. As you can see here, we've already begun to break out on HASI, which is Hannon Armstrong Sustainable Infrastructure. Here was our breakout on Friday. So a very nice move. Volume was a little bit light to me. Keep in mind that we're going to have resistance up here. It's rising at around, at current, $57.57. That'll change day to day. So what I want to buy here, probably not, because I don't have enough risk reward. So where would I buy it? On a retracement, I think. Down to, what is this? 55, 57, we'll create an alert. Keep a little bit of sensitivity on there. And there we go. Our alert is set. All of our alerts are right here to be edited if we'd like. Now, what's jumping out at me here is the seasonality for HASI. And if you're asking the question, what version is he using? I'm using the exact version that our silver and gold level members get with their service, because I always want to know what type of performance, what type of value our members are getting. So I use the same exact software that, or the version of software that our silver and gold level members get. So seasonality in April is very favorable, as you could see. May is not so favorable, usually up 82% of the time. In April, May, around 40%. This is good data. This only goes back 5 years ago. June, up 80% of the time. So a really nice rebound. Let's go back a little bit further. If we can, we can go back to 2013. That's max. All right, so going back 8 years, it's smoothed out a little bit where you have April up 75% of the time, May up 62% of the time, and June 75% of the time. So good stuff. So we're in a seasonally favorable period of time over the past 8 years. 5 years, just keep an eye out for May. Put a note in the back of your mind. And you can also scan for seasonality on TrendSpider. If you want to use the scanners, you don't know how to figure it out, they're already made for you. So our alert is set here. We know our seasonality. Now let's talk about one of the trades that we did last week. And it was Netflix earnings. We're going to do the same thing this coming week with Microsoft. We already are positioned in. Google is coming out. We'll probably trade Google on earnings. So going into earnings, we don't buy calls. We don't buy puts. We don't buy the common stock. Why? It's because in terms of options become more and more expensive just before earnings. Why? It's because everybody's buying options. So what we like to do is we like to sell options. So what we did is we sold a deep out of the money, because when they reported earnings, they closed at $5.49 per share. So I said, I'm going to go one standard deviation out of the money. So one standard deviation was a $50 move in either direction. So I sold a call, bringing in income at the $600 strike price, expiring last Friday. So it was a seven-day option, and the options had been increased in value by 14%. And the next day, they just collapsed. It's called an IV crush. Lovely trade. To the downside, we sold a put at the 500 strike. So Netflix reported bad earnings, but where did they find support? Right where the automated trend lines here show you. Take it off, put them back on. These things work. So I closed out this trade pretty quickly. I wanted to make profits real. You never know if the shares are going to continue to decline because Netflix reported some difficult earnings. So I wanted to get out as I saw that IV crush. The options just collapsed in value, and we took advantage of that. So we made those profits real. So in closing, folks, please join us tonight 6 p.m. Eastern Standard Time, live, as we go over the opening futures action of the market. We'll talk about earnings and those earnings plays that we're going to look to trade this coming week the same way we traded with Netflix. We're not going to buy the options. We're going to sell the options. We want to be the casino, not the gambler. So hope to see you there tonight. Don't forget, 35% discount code on TrendSpider. If you want to join my membership at the Contrarian Trader, get my trade alerts, my commentary, my insights into the market, and you want feedback on stocks that you want me to review during one-to-one sessions on our live streams, private live streams that are not viewed on YouTube, sign up, 14-day free trial offer. You also get TrendSpider. Hope to see you tonight. Everybody have a great remainder of your Sunday and a profitable trading week. Be well.